cake, bakers man. Bake me a cake as fast as you can.
Spread some cheer with the people you care about with a delicious hand-baked cake from the Cheesecake Shop. Find your cheer cake at the Cheesecake Shop.
Okay, so I'm Managing Director of the Cheesecake Shop, so I couldn't help but give you a little bit of a promo here. And I'm going to talk about how we've applied Tanda and Xero and Spotlight and other cloud solutions to our particular situation. So it's a little practical lesson on what we've done and what we've discovered over the last few years and how it's helped us in lots of different ways. The Cheesecake Shop has, just by way of a bit of background, we've been around about 25 years. We have 220 franchisees across Australia and New Zealand, and we have 6 stores now in the UK, so we're still growing. We've got something like 1,400 staff that work within the business, not employed by us, but employed by our franchisees. Of course, we have some staff in our head office environment as well. So we're a reasonable sized business, and we're a franchise system and amongst many in this country, and because of our structures and because of some changes in the franchising environment, these cloud solutions have been particularly relevant for us over the past few years and will be increasingly so in the years ahead. I'm going to have to look back at my slides are down here now. Okay, so a bit of background. Franchising is, I'd say, is entering a bit of a mature phase at the moment. And within franchising, I mean, franchising, you can franchise accounting services, you can franchise an ice cream shop, you can have courier services franchised, there can be retail, business to business, all sorts of things can be franchised. So those industries all have their own characteristics. I think franchising predominantly started within the retail and food type of environments and has emanated out from there. Within the food and retail areas, the businesses are maturing and there's a lot of disruption occurring. It's probably becoming more competitive. For us as a retail food business, it's always been competitive in a sense, and that means that we've got to pay a lot of attention in a mature environment to the granularity of performance within our business to compete and succeed. A lot of other things have been going on as well, and you've heard about the scandals that occurred over the last few years in relation to 7-Eleven and Caltex, and then others like Domino's were swept into this, and lots of other large franchise systems in relation to the alleged or actual underpayment of workers, and that resulted in a change to the Fair Work Act with the Vulnerable Workers Amendment Bill that came into effect last October, which means that as a franchisor and as a director of a franchisor, I'm now liable for the underpayment of wages if they occur by our franchisees to their staff. Now that presents a lot of issues and things to consider, given that those franchisees may be underpaying someone in Karratha, Western Australia, and our visibility into their employment practices and what they're doing it traditionally has been quite difficult. And in a sense, before we implemented all of these changes I'm going to explain to you shortly, we didn't even know who our staff, who the staff of our franchisees even were, or how many they had, or let alone whether they were being paid correctly or not. Right at the moment, there's a lot of negative press being peddled by the Fairfax media in relation to scandals that are occurring within some franchise systems relating to the profitability of franchisees, the treatment of franchisees, and the imbalance of power that exists between a franchisor and a franchisee. And so we've got an environment at the moment where the Senate inquiry is underway at the moment, and there's regulatory uncertainty as to what may flow out of that. And I think on the back of that, there's also broadly community expectations of the corporate sector which are changing. And so these underpayment of wages issues and the current Senate inquiry are really saying to us that the community expects that franchisors simply can't have a franchise system and let it kind of run laissez-faire, to say, well, good luck, we hope you make a profit. We as a franchisor need to take a much more direct approach in managing the profitability, let alone the compliance of our franchisees. So all of this, whilst the Vulnerable Workers Act came in only in October last year and the Senate inquiry is underway at the moment, this has been bubbling away in the background for some time. And at the Cheesecake Shop, we saw this emerging some years ago, and we started this process around about 2014 to really say, look, we were at a situation where our franchisees were sending in an annual profit and loss statement. And they were coming in, you can imagine what they looked like in terms of 200 completely different looking charts of accounts. They were supposed to come in on a certain time. We would spend months chasing up franchisees to get that information, and then it was a significant exercise simply to try and analyse it and understand, well, what's the average profitability or the cost of goods of our franchisees. So it was really pretty archaic. So in that type of environment, we not only didn't have the accounting information, we were nowhere near even understanding what was happening in terms of payroll. And our attitude some years ago was simply, well, that's the franchisee's responsibility to comply with the law in terms of payroll, and in a way we didn't really want to know what they did or didn't do in that sense. So that's where we'd come from, and I would have thought we would be pretty typical of a lot of franchise systems, that our focus was on the quality of our cakes and our customer service and opening stores and at the consumer front end, and wasn't really in this area of saying, well, are you compliant, are you paying your tax, are you paying your wages, and are you making enough money? So what objectives did we determine for ourselves, and where did we we came to this conclusion we needed to improve the quality, consistency and timeliness of financial reporting for franchisees. We did need to achieve payroll compliance, although that came along probably a couple of years after we commenced the kind of bookkeeping and accounting program. We could see that there was franchisee workload in complying with the standards that we developed, and so then part of that of this program became, how can we make it easier for our franchisees through the use of cloud-based software and outsourced bookkeeping services to make their lives easier. I can confidently say that not one of our franchisees joined the Cheesecake Shop because they said, I'm really good at bookkeeping and accounting, and I know the General Retail Industry Award backwards. They come in because they wanted to bake cakes and have a cake shop and have their family employed and run a small business. And so it's very rare that our franchisees come in with any level of understanding technically of how to do the basic bookkeeping or accounting. And in fact, I don't think it would be unfair to say that there is a very low level of sophistication amongst these type of small business franchisees in relation to just accounting and any sort of data management indeed. So we could see that as a franchisor we really needed to provide a lot of assistance and help to our franchisees there. And that really flowed into the last point, which was useful, timely benchmarking data which could assist both franchisees and us as the franchisor to better manage profitability and compliance. So these were the broad objectives that we went underway with, and I'm going to show you in bits and pieces how we did it in the various elements of this program. So here's the solution. We changed our franchise agreement, and a lot of franchise systems would have been in the same boat that we were, is that you can't just automatically say to your franchisees, you will use this software, you will comply with these standards, or we will do your bookkeeping, or any such thing. You've got to contemplate this within your franchise agreement, and a franchise agreement typically will have a 5 to 7 year term, so that if you come up with some thought bubble that you think is a great idea, it could well take you 5 years to roll that out by the time that franchise agreements renew and you're able to put in some new provision into your agreement that gives the franchisor the capability to require certain compliance or standards or use of software or bookkeeping services. We had to develop bookkeeping, payroll and accounting standards. When you're dealing with 220 individual businesses, there's no other way to cope than to be able to say, this is how we're going to do it. And it was more difficult than I think we at first imagined. There was no accounting advisor or accounting specialist that really understood this particularly well. First up, we had to have a standard chart of accounts, which seems fairly straightforward and obvious, except that pretty much every bookkeeper that the franchisees used would inevitably every month come up with some reason why they needed to add a particular account to the chart of accounts, which then makes, which they don't understand had these implications later on in terms of how we would use the data for benchmarking and how we would simply manage it. So a standard chart of accounts, and then looking at all of the major areas of the business and determining, well, how would we count the revenue? When we recognise the cost of goods, would we have purely cash or purely accrual, or would there be some combination of cash and accrual? What about wages? Would they be on a cash basis? Yes, probably. But if ingredients were, in our case, if we did ingredients on a cash basis and not on an accrual basis, then we wouldn't be able to get accurate ratio analysis of our cost of goods relative to our sales. So there were lots of little details within the business that we had to understand in terms of how we would lay out our standards, so that over time we would be able to get standardised bookkeeping across all 220 stores. And ultimately this was about getting the quality of data that we needed so that we could have accurate and timely benchmarking and profit information for our franchisees. The software we used, Xero, Tanda, and one that I hadn't heard mentioned yet was Spotlight Multi, which has been absolutely fantastic as part of the suite of cloud-based software we use. I think you're familiar with Tanda and Xero, but what Spotlight does is enables us to import the data from the 220-odd Xero files and produce benchmarking information. You just cannot go through 220 profit and loss statements every month and decide that this is an issue, or that there's a percentage out here, or that maybe this franchisee's not managing their labour costs well. It would just become too overwhelming and time consuming. What Spotlight does is it produces benchmarking data and it ranks the stores on their ratios, produces great looking graphs and reports, and enables us and our field team to focus on the top 5 or the bottom 3, or why are you different from the average. And so that's been enormously powerful in terms of our operations team and our franchisees getting meaningful information out of the accounting data. And I'd say that it's rare that our franchisees actually go into Xero and look at their profit and loss statement. And what we discovered was that unless we served up the critical KPIs to our franchisees in front of them on our kind of dashboard, they probably wouldn't read it or pay that much attention to it. And that's just typical of this level of small business. But the ratios of what their cost of goods was, what their labour ratios were, what their EBITDA percentage was, what their EBITDA dollars were, whether their revenue was going up or down compared to the same week prior year. These KPIs are now extracted out of Xero directly and served up onto our dashboard, which they would log into on our intranet. A bookkeeping service, we started out by having the standards and then saying to all the franchisees, get your bookkeeper to read our standards, and that's how we want it done, and your financial reports need to be completed and reconciled by the 10th day of the following month. And guess what the compliance was like from all of the bookkeepers out there? Appalling. First of all, half the franchisees couldn't see the value in employing a bookkeeper. They could do it themselves. And so you can imagine the sort of mixed result we got from that. But even with the professional accountants and bookkeepers, I'm away this week, I was sick yesterday, I couldn't get it in on time, so there was no way we could get the information in a timely way, but we also couldn't get them to comply with our standards. They all knew better and thought that their client was somehow different or special in that sense. So we concluded at the end that we had to provide the bookkeeping service to our franchisees. And this is critical to the change in the franchise agreement that gave us the ability to say, We do the bookkeeping for you. When I say we do the bookkeeping for you, we outsource that, and I'll talk about that in a little bit more detail. More recently, we've discovered that we needed a document management system. So this is really about franchisees uploading documents into a cloud storage system so that our bookkeepers, as well as our head office staff, could see just the basics like receipts and invoices or bank statements if the feed hadn't been coming into Xero for whatever reason, or if Tanda wasn't implemented yet, or we didn't have Tanda in a lot of stores until recently, then timesheets had to be uploaded into this cloud system. So that's been an important component of making the whole thing work pretty well. And lastly, once we had all this working, then it was a matter of the team players, our bookkeeper and Bridget from Tanda, because we're doing a lot of implementation with that, and our IT people and accounting staff, having a monthly meeting simply to review the benchmarking data and the various issues that have been brought forward to us by the bookkeeper. I won't let you read the franchise agreement, but if you're interested, these were the clauses that we inserted into our franchise agreement that allowed us to direct the franchisee, we will do your bookkeeping for you. What's it all cost? And I thought you might be interested in what we charge our franchisees. So look, we divided up our franchisees into 5 cohorts depending on what their turnover is, because the cost of the bookkeeping to us did vary based upon the size of the store, because clearly the payroll is bigger in a higher turnover store. But also the higher turnover stores are more profitable, and so they had a greater capacity to pay. And so we were a little bit like the government in that sense, is that we had a progressive system so that our smallest franchisees that were more challenged profit-wise paid a lower fee. So if you look at that monthly charge there, the smallest stores now pay $280 per month plus GST for their bookkeeping service, Xero, Tanda, Spotlight, and that includes the weekly payroll and the monthly bank reconciliation. And they get for that the benchmarking analysis, a monthly profit and loss statement, the GST pretty much ready to go for their BAS. For the payroll, that's become even better now, of course, and easier with Tanda, but they get sent an ABA file, which then enables them to quickly process the wages through their internet banking. All of that's included in that one single fee. Okay, developing the standards. This is just the contents page from the accounting and bookkeeping standards that we developed. Of course, it's developed over time as we ran into issues and problems and thought, we've got to clarify that, we've got to do this, we've got to do that. The simplest little things had to be thought through, even from how they would name their bank account so that we could, just dealing with 230 bank accounts and getting that all organised in a sense, making sure the tasks for the franchisees were broken down into simple daily, weekly, monthly, annual things they needed to do and keep it simple for them, and then a whole lot of standards for the bookkeeper in terms of how you'd recognise and record revenue, purchases, end-of-month stock takes, how you would treat of these various major expense categories, so we had consistent data across it. So it took quite a bit of time, and it was quite an iterative process to develop up these standards into a manual. Okay, so this is what the benchmarking data looks like. This is the front page of the Spotlight report that we generate each month. And what it does for us, this report is for national all stores for February. So we get this report within 10 days of the end of the month, and it'll give us the last 4 months. And you can design the Spotlight reports any way you want. So it's a way of, you can develop your own sort of reports. This is what works for us, and it gives us all the key ratios. So we would look at that and go, okay, the average cost of sales in February was 28.4%, and year-to-date it's 29.9%. And we can say, is that up or down on last year? Are our ingredients costs going up and down? We could look at our employment costs, franchising expenses, general expenses, property, EBITDA, and then we do our EBITDA adding back our owners' wages and super, so we have essentially a measure of the cash flow that's available to the franchisee to pay their own either their own financing or their own wages out of that. And then there's a little bit of a graphical representation of the wages costs, the cost of goods, and the profitability of the franchisees. So at this level, we then break this down into the different cohorts of stores, so that if you're a Tier 2 store or a Tier 3 store or a Tier 5 store, you would get a report that showed you all the other stores of a similar size to you. So you could look at your ratios. And what I haven't showed you here, because it just looks like a bunch of figures, is the next page of this report actually lists the stores by name and ranks them so they can see where their revenue ranks, where their cost of goods ranks, their employment costs, their other critical expenses and their profitability, and they can see how they rank amongst the cohort of other stores that are of a similar size to them. And that creates a little bit of competition between the stores, and it gets them to see, okay, well, if Wavell Heights or if Tweed Heads or if Townsville is doing a lot better than me, then what is it about them in terms of their labour costs or their cost of goods that they're doing that I'm not? And it's a way of encouraging them to communicate amongst themselves as to what's working and what's not working within their stores. Even those benchmarking reports, as simple as we might think they are, and as you guys as in bookkeeping and accounting and payroll would think, yeah, I get that pretty quickly. For probably about 70% of our franchisees, that's just a kind of list of numbers that they don't really get, and they're not really interested in kind of delving into. It's not their thing. They want to make cakes. So what we've found is that we've got to dish up the critical KPIs in a really in-your-face kind of way. So this is an image of our dashboard. It's actually the head office kind of view, but each franchise store, when they log in, would see their own sales revenue for the last week, and it would tell them whether it was up or down, their customer count, their average sale. And if you scrolled out to the right there, it will give you their cost of goods. And we've pulled that data directly from the API out of Xero that can say, right, your cost of goods in your store was 27.5% last month, and they can then look at that and compare that with the averages and benchmarks within their cohort. And although this is a static slide, on the screen you can scroll to the right and it would give you their employment cost and your EBITDA ratio as well. So the stores have got the few most critical KPIs simply on their dashboard when they log into our intranet, which is a useful tool for them. They order their ingredients through the dashboard, they do all sorts of other things, get their recipes and so forth through this tool as well. So we found this became quite important, and I guess the lesson here is that for your small franchisee business owner, it's probably not wise to overestimate their financial literacy. It's not particularly good. And so our responsibility as a franchisor was to present information in a way that was compelling, usable, readable, and not overly scary for our franchisees. And this has to be combined with the soft stuff of presenting to them face-to-face and running little workshops with them and getting them over time to understand what this information means. Tanda's been fantastic. We trialled it. We trialled another time and attendance system. We picked Tanda. We thought it was the best. And we've been implementing it over the last 12 months. So it does take time when you've got 220 franchisees. Let me say that Bridget, if you're here, Bridget, I don't know, from Tanda, have done an absolutely outstanding job. Your patience with our franchisees has been fantastic. Look, franchisees aren't exactly queuing up to say, oh, this is fantastic, Ken, when can I get onto Xero? When can I hand my bookkeeping over to you? When can I get my staff to clock in on Tanda? They generally see this as a means of the franchisor or big brother controlling things for them and taking away a freedom that they once had. We might say, oh yeah, there's going to be all these benefits and compliance and you won't get stung by the Fair Work Ombudsman if he does an audit. But for most small businesses, they don't know anyone that's ever had an audit from the Fair Work Ombudsman. They don't see that risk. They see these things as simply being an additional cost to them, and they've got to sell so many more cakes a week to pay for Tanda and so forth. So it's not an easy thing to implement these things. It takes a bit of time. But I can say that with Tanda, there was this initial resistance, but what we've found is as the franchisees have started using it, they're actually admitting to us, it's pretty good. We're managing our rosters better. We're getting the costing of our rosters the week ahead. We're saving money from time theft. It's fantastic. And in addition to that, we've been able to essentially subsidise the cost of a tander for them because it's reducing the cost of the bookkeeping. So it's enormously, improves the productivity enormously in terms of doing the payroll by having the timesheet data automatically coming in from Tander into Xero. So that's enabled the bookkeepers to speed up their processing and do more with the same number of people, and so we've been able to make it quite an attract. And that's where it's all wrapped up in that one fee package that we've presented there. Now, I was going to click on and show you some of the dashboards, but I don't know how I would even do this through this system here, but I might skip through that one there. But when you look at our Tander login dashboard, it's very impressive because you've got 200 stores in there, and you can just scroll through it and say, I wonder who's, as I'm driving past Mermaid Beach on the way back to the airport, I could actually log on to our dashboard from my mobile phone, and I'd be able to see who's in the store this afternoon, how long they've been on the shift. And if I popped in there, then of course I would expect to see them in there and I'd know their name. But whilst that might seem, well, that's nice, in terms of compliance, in terms of, are people in the store actually recording their timesheets and being paid correctly, this is enormously helpful to have that kind of cloud visibility on things. Our Xero dashboard's similar, all 220 stores are in there, and we can click on a store and drill down into the Xero file, which has been great, not just to see how the store is performing, but it has all sorts of other compliance benefits for us as well, in terms of seeing what they're purchasing and so forth. The bookkeeping is all outsourced to BPO Connect. Their head office is in Melbourne. Their bookkeepers are all based in Colombo in Sri Lanka. They have a local email address and a 1300 number. But we don't need our bookkeepers here in Australia. They could be anywhere in the world, and Sri Lanka works well because it's 5 or 6 hours behind in terms of the time zone. So when our franchisees send things at the end of the day, the bookkeepers have 5 or 6 hours to process them and have them back to the franchisees the next morning, and that's particularly important with the weekly payroll there. But of course it also contributes to a much lower cost of doing the bookkeeping. And that's a big part of making all this hang together. The document management system, so they upload all their documents to it. We did a proprietary system called Filing Cabinet, which they access through our own intranet, and we developed an app that works on both iPhones and Androids. It's a little bit like ones you've seen probably with there's various ones around, Shoebox and Scannable and these sort of things. It's very similar to that. They can scan receipts, any sort of document, bank statements or standard super choice forms and these sorts of things, and the app allows them to classify what it is and upload it into our system, and it automatically signifies what store it comes from and what the date of it being uploaded is, so that we and or our bookkeepers can see these documents in the cloud. And it also provides a safe and secure storage place for this type of information if there's going to be an audit later on at some point. Look, that's what Filing Cabinet looks like. It's not very interesting, is it? Just lists of documents, but you can filter it out. And there'll be thousands of documents in there, but we've designed the system so you can filter it and say, look, show me the receipts and invoices that have been uploaded between this date and that date for this store, and then it'll bring them up, and that means the bookkeepers can readily access this information when they need to. Lots of great compliance benefits. So, the benefits of better profit management and compliance with the Fair Work Act have been great there, but reconciling the bank account with the cash register and other data has given us enormous improvement in fraud and theft protection. Visibility of purchases in Xero. So the franchisees are required to purchase their ingredients through our nominated supply company, which is quite important for the quality of our products and for food safety. And so where they deem not to for their own reasons, they can never resist actually claiming the tax deduction and GST offset. So we can usually always see these things in Xero, which has been terrific. The Spotlight reports we also use not just for the benchmarking that you've seen, but we've developed another Spotlight report which gives us cash flow flags. So how big is their superannuation payable account? What about their GST payable account, their loan accounts? Did they miss the rent last month? So we've designed a Spotlight report that picks up on some of these telltale signs so that we can get a quick fix on any franchisee that might be having any sort of cash flow issues. And lastly, we see further work in this area, and I think a thing that we can see from Tanda is that we may be able to integrate Tanda with our point of sale system so that there's facial recognition on the point of sale system, and it'll prevent people from using the cash register if they haven't clocked in to the store on the timesheets. So things like this, and also tracking any sort of questionable type of use of the cash register, will be future compliance benefits that we see from these systems. Also, some communication benefits. For the first time, we've got an accurate list of current staff, their roles and their email addresses, and we never had that before. And there's an imperative within the payroll system to have an accurate email address and name, because it's at its demand. We can't send out the pay advice unless we've got the email address and so forth, and the onboarding system is also facilitating that within Tanda. So that's now given us an ability to develop a login for our staff to our intranet, so that we can start to tailor our intranet and the training material that's presented to people depending on what role they have within the franchise. So the franchisee, of course, we want to show them the financial metrics of the business, but we don't want the decorator or the shop assistant to see what the EBITDA ratio is for the store. So when they log on to the intranet, we know that they're a shop assistant, so they need to see training videos and promotional material and what's happening next week with our advertising, so that they can respond in their way. And we're now developing a learning management system, which is an online learning tool, which has really been facilitated by the fact that we know who our staff are, so we can now serve up to them appropriate electronic training material. That's all I got, and I'm happy to take any questions that people might have.